Well, greetings and salutations, test takers. This is Dean Tenney coming to you from my undisclosed location in northern Arizona with another free ride with Sydney. She's going to be doing an SIE STC practice test. Shout out to STC, Todd and his team for allowing the viewers of our channel to get a free look on STC content. I'll put a link to STC. They have, I think, all in on the package. I bought it. I think it was 125 or something around those numbers. So you can make your own judgment based on content. So here we go with the test exam here. A husband and wife have combined earnings of greater than 300,000 in each of the last 2 years. If it's reasonably expected this level of income will remain the same, the couple is considered.
Accredited investor.
Yeah, that's something everybody should know. Everybody should know. Do you know, Sydney, what a quib would be?
Isn't the quib over like a million or something? Or
100 million.
100 million? Okay.
That
Yeah.
too would be a test question. So if they would have said a qualified institutional buyer of securities under 144A can
hmm
best be described as, you would say, an institutional investor with over 100 million or more in assets under management. And what follows from them being a quib is that they're allowed to buy unregistered foreign and domestic securities. If it's an unregistered domestic security in a public company, that transaction would be best described as a PIPE, a private investment in public equity or a private investment in public equity. All right, good job. Let's go on to our next one. Whoop. Oh, it's telling us we got it right. Good. Oh my, oh my. Uh, ABC Corporation has a quarterly dividend of 15 cents. The declared date is the 3rd. The ex-dividend date is the 28th. The record date is the 28th, and the payment date is the 31st. So 3 of these dates, Sydney, are set by the corporation. The declared date, the record date, and the payment date are a function of the board of directors of the company. The ex-dividend date is the first date on which the stock no longer trades with the dividend attached. And that is a function of the Uniform Practice Code, which standardizes trading practices within the securities industry. Based on the information above, if a customer purchased 1,000 shares on the 25th, what is the cash amount of the dividends she receives?
So if it's the cash amount, if they purchased it on the 25th, so this would be the cash amount. So if she's receiving cash dividends, wouldn't it be the same date?
Well, first thing I think we need to solve here is this idea of whether she is entitled to that dividend. I think the answer to that is yes, right? If the X date is the 28th and you buy it on the 25th, you will be on the record date. The record date is when the company looks at their shareholder list, and if you're there, you receive the dividend. So 25th, regular settlement, T+1 would be 26th, 27th, 28th. I think you're there. So you're entitled to 15 cents on your 1,000 shares. And a typical test thing here, right? Now we got to decide, is that 15,000, 1,500, or 150? Now 0 would have been the correct answer if we determined that she's not a shareholder as of record on the 28th.
Okay, so I'm gonna go with I'm between B and C. I don't
Well,
think
let's get out our calculator. You got your calculator there?
Mm-hmm.
1,000 times 15 cents, 0.15.
Yeah, 150.
Boom. Right. And good news, this should be over by now, but it seems that kudos to STC. This is an updated question for settlement change to T+1, which took place in end of May. So shout out to STC for getting their materials updated. All the following statements concerning hedge funds are true, except
I think it's register under the Investment Company Act
Yeah,
of 1940.
you are absolutely correct. The whole point of being a hedge fund is I don't want to comply with the Investment Company Act of 1940. I'm not managing public money. Hedge funds are set up as private partnerships. The GP is the head fund manager, limited partners provide the money. These are sold as private placements by invitation only under Reg D, which means you need to be accredited if it's a 506C. Good job. A company stock has decreased in value as a result of the increased cost associated with impending regulations. This is considered
Impending regulations. I would think that could be like political risk.
Yeah, I would prefer we had a choice called regulatory risk, but we didn't. So given that answer set, you're absolutely correct. Credit risk would be associated with default risk in debt securities, default risk in bonds. Do you remember which bonds we would not have credit risk?
The Treasury.
Good job. Excellent. Liquidity risk. Liquidity risk is the ability to turn our security back into money quickly. Definitely associated with partnerships, not associated with money market.
EPPs have liquidity risk because they're
There you
illiquid
go.
investments.
Absolutely. An investor has a portfolio in which 25% is invested in an oil company, 35% is invested in a pharmaceutical stock, 30% is invested in exchange traded fund that tracks the S&P, and the final 10% is invested in money market funds. Which of the following risks is inherent in the portfolio?
I don't think it's political.
Yeah, it's certainly not. And I think you're on the right track. I would have done this through process of elimination as well.
Exchange traded funds, money market would have credit potentially. Liquidity. It's non-systematic risk. Which of the following risks? I don't think. Well, okay. Systematic risk is like interest rate risk, inflation. I'm between non-systematic. I think that's what I would pick because
Yeah.
Okay.
I'm with you. That was one where I like process of elimination to have, let's see, 25 and 35, 60% of your portfolio in two stocks.
Well,
Wow.
ETFs are liquid and money markets are also liquid, so you don't have liquidity risk.
That's exactly right. You got plenty of money laying around or potential to turn things back into money. Right on. Nothing political here.
And credit, they didn't have like any corporate bond funds or anything that would make me think that it could default. So that's why.
Perfect. That's again, process of elimination is so important in terms of getting those. The investments in a Coverdell ESA are.
All right, I might get this one wrong just because I genuinely do not remember. I think it's determined by the firm through which it's opened. It might be the investor, but
we decide what to put in a mutual fund, right? We fund the Coverdell with cash, 2,000 in cash, and then we decide what to invest in. I would recommend a mutual fund, but that's a different question. I doubt you're going to get the ESA in this kind of a format. I think you're going to get the ESA as compared to a 529. And in that beauty contest, the 529 is clearly the winner, and to such a degree that I know lots of financial institutions that don't even recommend Coverdells anymore. I always joke, right? How much college education can you buy with $2,000, right? So not bad. That's your first miss. That's okay. We can take it.
I didn't remember. Okay, so who is the most? And that's going to be it's going to be the longest duration. So the premium bond, I think, will have the most interest rate risk.
Well, you have a 30-year premium bond.
Actually, it might be the zero coupon bond.
Remember what's our memory aid device? Long and low.
Long and low, yeah, zero coupon.
Low, Sydney, long and low.
It's zero coupon.
There you go. Very much a test question, right? To ask you about volatility, right?
I'm gonna write that down.
When do option trades settle?
Oh, T+1.
Everything nowadays is a T+1. There is no answer, no set that it's not going to be T+1. I'm going to be kind of a jerk here, Sydney. You are correct. It is A. Do you know what B would have been the right answer to?
D.
B is in boy. Do you know what
Oh,
that
T
would have
plus
been?
three.
That would have been Reg T for customers.
Okay.
For
I
customers,
didn't remember that.
2 additional days. So if I would have said, Sydney a customer does a trade on Monday under Reg T, when does Sydney have to meet the margin call? That would be Monday, Tuesday would be T plus one, Wednesday, Thursday. So that would have been B if it said Reg T. You did get that correct. 3 business partners have opened a brokerage account as joint tenants with rights of survivorship. All the following statements are true except.
A. It
Yeah,
goes
right.
to his remaining.
Yeah, that would have been correct if it was tenants in common. Excellent.
Mhm.
All the following characteristics would be associated with a growth company except that it has.
High amount, I think. Okay. I think it's A or B.
You're correct.
Okay. A growth company. Let's see if it's a growth. I'm leaning more towards it could be B.
Yeah, we don't expect a growth company
To
to be.
have like a tie dividend payout.
Yeah, we would expect a growth company to take whatever, ammo they have, green ammunition, cash,
Mhm.
retained earnings, right? Keep all the earnings as retained in the corporation to build the business. I think a good example of this currently was Intel's board said until further notice, we'll have no dividend payout because we're going to be using all those resources. So we would
Mhm.
expect NVIDIA, for example, to pay us the dividend. High dividend payout ratio would be associated with a mature, stable company like a utility company or something like that. You're willing to pay a higher PE because the idea is in a growth stock that the price justifies a higher earnings number because that earning numbers has momentum and will rise. Excellent.
Thank God. Okay.
And which of the following funds is the percentage that invested in each of the various asset classes adjusted as financial markets change?
Asset allocation.
Right on. Right on. Boom. 529A or ABLE account is permitted for which of the following persons?
A person who has a significant disability and the age is 26 or
Excellent. Excellent.
yeah.
Excellent. A registered employee is required to disclose which of the following activities to her employing broker dealer.
Okay. Playing in a basketball, no. No. Serving as a director. I think it's serving as a director for a profit because you have to disclose if you're making outside.
That's right. Outside business activity. A isn't a business activity. You nailed it. C is not a business activity, and D is not a business activity. B certainly is. Jamie has inherited 500 shares of a mutual fund. She calls her broker to redeem the shares and is informed that the kind of investment company she owns makes no provision for the future purchases or redemptions. What kind of investment company does she own? I kind of like this one. This is
Okay, this one's asking me the difference between a closed end and open end fund.
right on, right out, right on.
And I'm trying to think because I'm a little
Yeah, take your
beat
time.
on this one. So I don't know. I don't think that the closed end fund can redeem shares. I think it's open end.
Yeah, shout out to STC. I think that's a good question. I like the way they phrase that,
Yeah.
and I like this that question. By the way, just to remind everybody who may be riding along with us, riding shotgun with Sydney and I, make sure for all exams you are able to contrast open end versus closed end funds. It's on the SIE, it's on the 7, it's on the 6, it's on the 65, it's on the 66. So, company has 50 million par value convertible bonds outstanding. The coupon rate is 8%. The bonds are currently selling at 96. What is the current yield? So very little math on the SIE, Sydney, but this is certainly one of them is can you calculate current yield?
It's 8.3.
Well, you're ahead of your tutor here. Let me see. It sounds about right to me because it's at a discount. Did you use your teeter totter
I
or did you do the math?
actually, yeah, I just divided.
Yeah, she's right. Yeah, that's embarrassing when you're beating the tutor to the answer. I thought you beat me to the answer using your teeter-totter, and here's what I thought you may have done to beat me on the math. Say, well, Dean, I know it's at a discount, and I know that the current yield in a bond at a discount has to be higher than the nominal yield being D, right? There's only one answer. But I would be prepared. Current yield is what an investment pays you, $80 in annual interest here, by what it costs you. In this case, 96% of par, 960, 8.3. You should definitely be able to do current yield on your SIE exam. What tax advantages is available with a REIT investment?
I'm pretty sure if 90% of the income is distributed, only the shareholders pay taxes, avoiding the corporate.
That's right. What else? What else is very similar to a REIT that has professional management like a REIT, diversification like a REIT, and provides ease of ownership, but it has a portfolio of securities rather than a portfolio of real estate investments. So where else does this apply? This 90% subchapter M conduit or pipeline?
Isn't that investment companies?
Yeah, mutual funds, right? On investment
Mutual funds.
That's right. I think a good memory aid device for this is DI 90.
Yeah.
DI 90. D for dividends, dividends on the stock in the portfolio if it's a mutual fund investment company, interest on the bonds in the portfolio if it's a mutual fund, minus expenses, 90. Good job.
Yep.
A treasury bond is quoted at 105.04, 105.24. The purchase price to the customer would expect to pay would be, I like this STC question because they're testing you on two things. They're testing you in this question on the bid and the ask or offer price, and then they're also testing you on how treasuries are quoted.
So, okay, let's see. So treasuries are quoted in 30 seconds.
There you go. You're on the right track. So now you got to decide, is it going to be 105 and 430 seconds the customer is going to pay?
No.
Or is it 105 and 30 seconds the customer is going to pay?
I think the answer is D. I think it's the 24.
Nailed it. You got it. Nailed it, Sydney.
Okay.
Remember, one of the testable distinctions between corporates and munis is if I am working a corporate or muni bond desk, the bond desk is the person who is buying and selling bonds into or out of the firm's inventory. I buy at my bid and I sell at my offer, and my minimum spread there is going to be an eighth.
Corporate and munis one.
Oh, yeah. All debt denominated securities trade over the counter in a negotiated quota of market. And you nailed this one, Sydney. The second part of this thing you nailed was that government securities are goofy. They use actual calendar in terms of accrued interest, and the minimum spread I make in trading govies is 30 seconds. And that's what this was about. And you nailed the quote. Whenever a customer is looking at two prices, a high price and a low price, the customer always pays the high price, always receives the low price. What's that called? The securities industry. That is our spread. So excellent, excellent. You were correct on the understanding that quote, and then you were correct on actually turning into the dollar amount. Good job. A registered rep has recently passed their Series 7. Woohoo! I love it. If the IR conducts business in 5 states, she is required.
She register in all the states.
Yeah. I mean, you know. That's about blue sky. I don't think on the SIE you'll get too many blue sky questions about the state administrator, but you know, we have 2 levels of protection as a retail investor. On the federal level, as a retail investor, the SEC protects me. But as a retail investor in my particular state, my state administrator is the one who protects retail investors in his or her state. This will be, for most of the people taking an SIE, an entire exam called 63, 65, or 66, which is all about the Uniform Securities Act and registering securities, broker-dealers, investment advisors, agents, investment advisor reps within a particular state. An investor shifted allocation of corporate bonds in his portfolio to foreign equities. As a result, he may be exposed to more
interest rate risk.
Corporate bonds.
Foreign is put. Yeah, I still into foreign. Okay, so he went from corporate to foreign securities.
So he's actually reduced his interest rate risk.
So I think he's more exposed to liquidity risk.
Well, okay,
Or
I'm gonna put that there. I think you're gonna get it wrong because I think in foreign
is
equities,
it political?
I would have gone for political, but let's see. I don't know. Maybe the tutor misses the question. When I think of foreign equities, I always joke the city. I know you're traveled the world, and I've traveled the world, and I'm always fascinated with Americans who maybe it's their first trip overseas, and they're just shocked about how different things may work. I always think of my mom when I take her to Europe, Sydney. She's much more comfortable in Northern Europe than she is when I take her to China or the Philippines or somewhere where it's a little,
Yeah.
thing. So I would have said political risk because I'm just thinking here, I have my lease there and I got making a good money. I got the best location in town. And then some general comes to me and says, I love your space here. I'd like to take that over from you. And I say, I've got a lease. And he says, I got a tank. I think my tank trumps your lease. So I would have said political risk, but let's see what
I might
happens
get
here.
it wrong. Yep.
Yeah, go. Well, you're still on pace. I think that's your second miss.
Hmm.
By the way, usually foreign equities do have less liquidity
That's
than
why I thought that.
US equity. So yeah. So it's not so much that you were as much wrong on that as that there was a better answer provided to you. I call these questions judgment
It was
questions.
just a
Judgment questions are where you can't make a flashcard. You just kind of got to think it through. Recognition, you've got all your recognition questions right. So far, you've got all your practical application questions right. Practical application was like that current yield question, turning the bond quote into a dollar a quote. And so you missed this judgment question. So I wouldn't beat yourself up on this at all.
Okay.
You want me to protest with our friends at STC?
No, I usually when I think of political and like legislative, there's usually something in the question about how government has like
Yeah,
done
absolutely.
something. So that's just like what I relate it to.
Yeah, well,
But
I'm teasing too, Sydney, because I do answer sometimes questions. I do feel like protesting. I'm like, ah, it is what it is, right? Which of the following is found in a preliminary prospectus?
so it's not the effective date or the POP that's in the
Perfect.
actual
I love the
prospectus.
way you rolled on that. I love the way you rolled.
Um,
50,
I
50.
don't I don't know if it's the number of shares being issued either. But I'm torn between C and D because I just don't remember reading anything about a fee table. So
Yeah,
I
yeah.
don't know what they mean by because you can't like is a fee table essentially like the price? Because if so, then it's D.
Yeah,
But
let's
like
okay. So which one do you want? And then I'm
I'll
gonna
go the number of shares being issued.
I like where you went there. As I always say, when you want to take your test, Sydney, if you don't know what the heck C is, then don't take it.
Yeah, I'm not
No,
going
you
to.
should only answer with things because our friends at STC here, and if you're using Kaplan or Past Perfect, are the actual test. They're very good at making up distractors. Distractors are the technical name for wrong answers for people who write, questions. And, they sucker you in when you go, man, I had a guy, he passed, good news, Sydney, but he said to me, he was asking me at a Murphy account. I go, I have no idea what a Murphy account is. I don't know, an account that goes the wrong way all the time. I mean, I have no idea what that is. He goes, you didn't tell me there's no such thing as a Murphy account. I said, well, listen, if we would have talked about things that don't exist, we'd be here for, weeks. I said, why would you even pick that? I mean, there's cash accounts, there's margin accounts, there's joint accounts. I mean, why pick the Murphy account? He said, well, Dean, it was nowhere in my study materials. You had never talked about it, so I figured it was the right answer.
No.
Listen, if you haven't seen fee tables in your study materials, your tutor has never discussed fee tables with you, then it's not a right answer. Now, primarily, Sydney, I know that you're going to now roll on some other potential test questions about a preliminary prospectus. You nailed the B. You just right out of the gate said, Dean, I know a preliminary prospectus doesn't have the final offer price. And I know we use it prior to the effective date. The effective date is when the registration is effective. What's the other name for a preliminary prospectus?
A red herring.
Absolutely. And once we make our registration statement, who cares, called an S1, and we're distributing these preliminary prospectuses, we're in what's called the quiet time. What is another name for that quiet time?
Is
Where if
that
you call me, I say, Sydney, I'm not allowed to comment on the prospects of the issuer. We're presently in the quiet time.
is that the
A
cooling off period?
There you go. The cooling off period, which is a minimum of
20 days.
excellent. During the cooling off period, I'm going to be accepting indications of interest.
And you can publish Tombstone.
Right on. My question to you, Sydney, is are indications of interest binding or non-binding on all parties?
I think it's non-binding.
Excellent. Excellent. All those are very testable. So good job. A company has announced a tender offer for its shares at 50. So what that means is the company would like to buy back its stock into the Treasury. I have a question for you, Sydney. How long must the company or anybody making a tender offer leave it open?
Tender offers. I feel like I just read this.
20,
Is it
20 days.
20 days? Yeah, it's 20
Okay.
days.
And when they
I
buy
was
this,
about to say 25, and then I was like, no, it's
no,
not.
that's okay. That's all right. So we're just using this to riff, on other
Mhm.
things. And Treasury stock, remember, whatever stock they do buy back into the Treasury has no voting rights and pays no dividends.
Right.
So the answer was to purchase a minimum of 100 shares with a maximum of 1,000,000.
Mm-hmm.
If 80,000 shares are tendered, how much will an investor receive if he's tendered 8,000 shares?
This one, I'm not gonna lie, I haven't done math on something like this.
Yeah, it looks like it might be deceptively kind of too easy. So let's see.
Yeah, I don't think
A
there's.
minimum of 100, right? A maximum. So they 80. So that means everybody who tendered is going to get paid. And
Mm-hmm.
you said you'd like to accept the tender. So 1,000 shares of 50.
So it's 50. Okay.
Yeah.
The
Oh, Dean missed it.
zero. Since the
Well, there you
tender
go. The tutor
offer.
missed a question. So what did I miss?
I mean, we
Since it
both
has a
missed
minimum
this.
of, oh, there we go. Get STC got us. There it is, right? We didn't get the minimum of the 100.
Oh, so if you don't
So
get the
this was
minimum, you don't
all
get
or
it
none.
at
Yeah,
all.
all or none. Boy, gotcha. They
That
got
was
me.
I mean, it was a good
A
question.
very good gotcha question. It's still a gotcha question, but we didn't catch the 100. I just looked at the 80 and said, oh, it's up to a million. So we get 50.
So just
RTFQ, read the full question, read the full
so
answer.
moving forward, if there is a tender offer, it has to meet the minimum or it doesn't get filled, right?
That's exactly. It's kind of like a version of an underwriting all or none, right? All
Okay.
or none. So this would be it's not an investment banking question, but sometimes we would refer to this 100,000 as a green shoe.
Okay.
Who creates the options disclosure document? I love this one.
The OCC.
Yeah, they are the issuer and guarantor of all options. Very testable. I'm going to give you the disclosure document, characteristics and risks of options. Very testable sequence. D, disclosure document. I say, Sydney, I'm going to go get your account approved, I hope, by my ROP. A, account approval. I say, hey, good news, Sydney, I got your account approved. We can do our first trade. T, trade. I need back from you, Sydney, the option agreement within 15 days. That whole sequence is very
Oh yeah.
testable. And the way
Data
to get it right is
18.
that's right, data 15.
Mm-hmm.
Disclosure, account approval, first trade, option agreement, 15 days. If it's late, we only let you do closing transactions. The OCC issue is the one who also assigns exercise notices, and the OCC does that randomly. So I always tell people on the SIE there are option questions. Most of them are recognition, not strategy. And make sure you get all the recognition option questioners entitled to. And the OCC is most certainly there. Most certainly there. When an underwriting broker dealer is able to accept payment, when is an underwriting broker dealer able to accept payment for the purchase of a new issue?
Um, when okay, they're accepting payment. I feel like it's when the registration is declared effective.
Yeah, always go with your gut answer.
That
Right.
was my gut
Oh, there you
answer.
go. Because B, C, and D, we're still in the cooling off period.
So
Right.
far, only
Cooling
three
off
wrong.
period, all we accept is indications of interest, which are
Mhm.
non-binding on all parties. When is a dividend payment made?
Derp, dividend, record on the payment date.
Boom.
That was like a
Yeah.
That question was
Let's
so
use this
easy,
answer
it
set.
made you question things.
Let's use this answer set. I love this answer set.
Okay.
You were correct. It's A. What
Mhm.
if I would have said, which one of these is the first date on which the stock no longer trades with the dividend attached?
The ex-dividend date.
Yeah, let me give you another one. All the following dates are set by the board of directors except all the following dates are set by the board of directors except.
Um, is it the record date?
No, the record date is set by the board of
Oh,
directors.
okay, is it the X date again?
Yeah, the X date is a function of the Uniform Practice Code, which standardizes trading within the securities industry. Another one for you. Which one of these is the same as the record date? Which one of these is the same as the record date?
The declaration date?
The X date. The X date and record date are one and the same.
Oh,
Because
I
the
didn't
X
know that.
date emanates from record. Yeah, it's relatively new that it's the same. The X
Okay.
date was still there. So X emanates from record, not the other way around. So
Are are they gonna
I like the answer set here.
are they gonna test me on the differences between just like closed end versus like open end? Because like,
Well, yeah, well, let's just talk about it. I don't think it'll be on your SIE. I mean, it could become testable.
okay.
As I said, the Uniform Practice Code standardizes trading, secondary markets within the securities industry. In an open-end mutual fund, there is no secondary trading. And so all the dates are set by the board, and the X date is typically one day after. So
Yeah, it's
I
direct.
don't know. I mean, lower probability is what I would say to that. And I know, Sydney, your testing journey still has a couple more legs to it. And on other exams, I might test you what happens on the balance sheet when they declare a dividend. It becomes a current liability, causes working capital to decrease, not SIE, but 766, that kind of thing.
Okay.
If a market maker has a quote of 50, 5005, 15 by 20, I feel bad. This is definitely testable in the SIE, Sydney. And I
Mhm.
saw somebody on social media the other day that said none of their study materials ever covered this. And I thought, well, gee, I don't know who your provider was. I don't really believe that. I think they probably just didn't catch it or
Mhm.
whatever, or maybe
Yeah.
they're trying to get over for free. But if I'm a market maker, remember, we're talking about an over-the-counter transaction. This
Yep.
quote is from the dealer's perspective, known as the market maker dealer. I'm willing to buy 15 round lots into my inventory at 50, and I'm willing to sell 20 round lots out of my inventory at 5005. This indicates the firm is willing.
So I think it's between C and D.
Okay, so C says I'm willing to sell 1,500 shares at 50. No, I'm willing to buy 1,500 shares at 50 and buy 2,000 shares at 5005. No, remember the dealer quote is from my perspective. So as a customer, you're on the other side of that quote, right? So I'm
Mhm.
willing to buy 1,500 shares into my inventory at 50
Mhm.
to sell 2,000 shares out of my inventory at 5005. By
I
the way,
think
it
it's
says the firm is willing, so it's not about the customer, it's about the firm.
yeah, I think it's D.
Yeah. Now, what if you call me and you say, very testable, you say, Dean, what is your quote? And I'm the market maker, and I respond by saying, my quote, Sydney, is 50, 5005, 15 by 20. And
Mhm.
you respond by saying, Dean, we'd like to buy 1,000 shares at 5005. And I say, I changed my mind. Very testable.
Yeah,
If a
because
market maker fails to honor a firm quote, this is a prohibited practice and is known as very testable. That's
is
called
it
backing away.
backing away? I don't know why I was about to
Backing
say
away.
selling away. It's
That's all
backing
right.
away.
That's all right.
I knew it was
No, backing away, backing away. Selling away is when you sell an investment not sponsored
yeah,
by.
when you don't have, yeah.
Yeah, that's bad too. They're both bad. They're both bad.
They were
Right?
both
As a
on my
market maker.
mind.
That's right. As a market maker, my minimum obligation is 100.
Got it.
If a customer purchases securities and fails to pay for them by the payment date, the brokerage firm will.
Okay, so the customer purchases and then they fail to pay for them. I'm between A and D, but I'm also thinking it could be okay, yeah.
So, I'm being a little aggressive on hitting buttons when you tell me what your first inclination is.
Yeah, it was sell out the securities and freeze the account, but also then I just think about selling securities that, or buying a security that you can't pay for, and I automatically go to margin.
Well, yeah. So, yeah. Well, there you go. But here,
So,
this is called a free ride. You
mhm,
took a ride you didn't pay for, free
mhm.
ride. You used the broker dealer money to purchase that security, and then we sell you out. So my next question for you, Sydney, is I sell you out,
Hmm.
and let's say that by the time I sell you out, there's a profit. Do I have to give you that profit? So you bought
No.
1,000 shares at 10. By the time I sell you out, it's 12. There's a $2,000 profit. The answer is yes. I
Oh,
have to give you
okay,
the two
well,
thousand
that's
dollars.
on me. I didn't
Yeah, well,
remember.
that's what we're talking about. And what is freeze? How long is that freeze going to be for?
Isn't it 15 days?
90 days.
Oh,
Right.
90 days. Okay.
And can you still trade with me? Yes. What's
Yeah.
frozen is not your trading privileges, but your credit privileges.
Okay.
The main difference between closed-end and open-end companies is closed-end companies.
Offer a fixed number of shares
Yeah,
because
I can't stress how important it is on all the exams to
Mhm.
own intellectually the differences between open-end and closed-end funds. Very good
Well,
job.
the open end can do full or fractional
There you
shares.
go. That's
Closed
right.
end are just fixed.
Right on. A broker dealer is acting as a distribution participant of public offering of stock. To entice the customer's purchases, I don't like the word entice right out of the gate as a compliance kind of that word. You tell me you entice the customer. I'm like, yeah. The firm pledges to repurchase the shares sold in the offering from the customer at a price higher than the original pop. This type of pledge is,
I'm gonna go D.
yeah,
If I
like,
get it wrong, then that's fine.
the thing that all right out of the gate when we hear the word entice, that's just not a word that we use, in the securities industry.
Nope, not at all.
I'm thinking of my sister-in-law's Chow, and he's not very friendly, Sydney. I mean, not because he's vicious or anything, he's just skittish. And so, I had a couple extra slices of bacon the other day, and I was enticing him. You know, said, "No, I don't know about Uncle Dean there, but for a piece of bacon, you know. If a company is utilizing statutory voting, so in our corporate charter, we're going to stipulate whether we're using statutory voting, cumulative voting, or super voting. And this says that the company is using statutory voting. How many votes will a common shareholder receive per vacant seat on the board?
I think it's one vote for each vacant position on the board.
And then remember, if it was, we missed a
Oh,
one vote.
it's the stockholder.
Yeah,
Okay.
yeah, it's your vote per share. Shares, though, not people. So I just hit your button a little too quick before
It's
what.
okay. I deserve to get that wrong. I
Well,
did.
the other thing I would say, remember the mantra we always have is read the full question, read
Hmm.
the full answer set.
I
Now,
know
if
that
this were
that should.
cumulative voting, if it was cumulative voting, we would multiply the number of shares you own by the board seats. So if I have 500 shares, 3 board seats, I have 1,500 votes. I can spin them in any flat fashion I would like. If it's super voting, for example, uh, Alphabet has super voting. Ford
Hmm.
Motor Company has super voting. That would be more than one vote per share. Like Zuckerberg at Meta, his shares have 10 votes per share. Woo. So the 3 styles of voting are statutory voting, 1 vote for each share you own. So in my example, you own 500 shares, 3 board seats, 500 yes, no, 500 yes, no, 500
Hmm.
yes, no. Cumulative voting, we multiply the number of board seats, 3, by the 500 shares, 1,500 votes, spin
Hmm.
them in any fashion I want. And cumulative voting protects smaller shareholders because on any one thing they can load up. And then
Hmm.
super voting, more than 1 vote per share. And that's usually the founders that would have that. Like in my example of the Ford Motor Company, all the B shares are owned by the Ford family. Or Meta, all those B shares are owned by Zuckerberg. Those are called dual class of voting. Dual class of voting. You got this right previously. U.S. government bond is selling in the market at 95.28, and you nailed it last time, 30 seconds. That's testable. So the dollar value of the bond is.
I think it's D.
Yeah, the way I go about it is I take my calculator, 28 divided by 32. Then I times it by bond point, which is 10, and I come up with 875, and you are correct.
Yep.
You are on top form this morning, Sydney. You're beating the tutor to the math.
I didn't even have coffee this morning yet.
But by the way, I would tell you that's now I got to rain on your parade a little bit. It's not that impressive because I'm terrible at math.
You're
It's
great at math.
it's pretty easy to beat Dean at math. Right?
You're great at math.
5% 1,000 par value sells at 900 and matures in 10 years. What is the amount of each interest payment? Again, I like this
25.
question. What's that?
It's 25 because 5% is
There you
the
go.
nominal.
I got to
and
give
it's
STC kudos on this question. I do like this question because what they're testing you on here is two things. Do you know that the nominal yield, the coupon, the fixed or stated rate of return, which by the way is all means the same thing, right? 5%. That's like learning a foreign language. Do you understand that that doesn't move? And then do you understand that that's 5% of 1,000? You nailed it, $50. Then it's testing on, do you understand bonds pay semi-annually? So excellent, excellent. The current market value of a stock is below the strike price of a call option. This situation is referred to
out of the money.
right on. Good job. So this does show up on the SIE, and I told you, so does a strategy, but we'll see how STC's practice test goes here. You are correct. I would expect to have one question as an SIE test taker about this relationship of the strike price to the market price, in the money, at the money, out of the money. At the money would be when the strike price and the market price are the same. In the money would be when the strike price is below the market price, or call up, the market price is above. So, and then I would expect one strategy, and then the other two or three would be recognition, like when do options expire, when do they settle, that kind of stuff. Yeah, boom. Which of the following statements is true regarding the form 10K?
I don't know. I think it might be the fiscal. I'm between B and C.
Okay.
It's
So,
offered monthly,
which one I
or
like?
maybe it's at the end of the fiscal quarter.
Yeah, you're right. That's the annual report.
Okay, yeah.
10K is the annual report. The quarterly reports are the 10Qs.
That's what because
Yeah,
I
we're
was
gonna have
like,
3 10Qs and
mhm.
then a 10K. So that's C, right? A would have been the right answer to 10Q, 10Q. I can't think of anything D is the right answer to. B is a proxy.
Oh yeah.
Proxy. B is a proxy. If they say which of the following is just best describes a proxy, you would say B. Unit investment trusts.
It's between B and C. I'm just trying to
I'm
think
with
of
you. I'm with you. As a test
an
taker, those say
undivided
opposite
interest
things.
in a fixed account. I
You
think
know,
it's
yeah, go ahead.
I think it's undivided in a fixed account.
Yeah, because the portfolio is, the way to get that right. That was a really tough unit investment trust question.
I was like,
Yes,
I
um,
know that they're fixed. I know that they're not managed.
yeah, and that's
Or
exactly
they're
more
passively
often.
managed. Sorry.
Sydney, that's more often the question is just that. So yeah, this is a real tough, I think, UIT question. You got it right because of the portfolio, right? It's a portfolio that's been professionally selected, but it's not professionally managed. It's selected by the board of trustees. So that was a tough one. Let's see what their rationale is. Our friends at STC tell us. Yeah, well, there we go.
Yeah.
Which of the following may not occur during the waiting period of a securities registration?
I think it's C, accepts a cash deposit.
Yeah, right. That's testing you again on that cooling off period. Excellent.
Mm-hmm.
When discussing the purchase of a variable annuity with a client, the RR is not required to disclose.
Okay, so fees associated with an annuity. I know they have surrender
Yeah.
fees. I know they have mortality and probate, I believe. Maybe it's administrative fees.
I don't know. This is a tough one. I think I would have gone with probate because I go, how the heck am I going to know about what happens when you die? But let's see.
Oh,
Yeah.
it's probate. Okay.
Yeah, this is a strange question. So I've been giving some shout outs to our friends at STC when they have some good questions.
That's a good
This
one
is,
because I got it
I
wrong.
don't know. I don't really know if I call this a good one because I don't really think this is something you'll see on SIE. I would think of a variable annuity as a mutual fund with an insurance wrapper. And I think it's very lightly tested on SIE, heavily or more, I should say, more heavily tested on 7, 65, and 66. What is the maximum profit for the buyer of a call option?
Unlimited.
Yeah, these sound cool. How with limited risk, Sydney, would you like unlimited reward? How as little as several $100s would you like to control thousands of dollars worth of stock? The
Um,
main disadvantage of a 529 prepaid tuition plan compared to a 529 savings plan is that.
I think, okay, so the prepaid tuition, I don't think that that is like, I think it might be the distributions are not used to pay for education. They're subject to the 10%. Um, the main because it's a disadvantage.
Disadvantage. Yeah, let's see. That's a tough one. The account owner may lose financially if the student, oh yeah, because you can only give it to another, family kind of person. The main disadvantage of a prepaid tuition plan is the investor may suffer financially
Okay,
if the
so
beneficiary attends an out-of-state private college. Unlike 529s, prepaid tuitions do not have distributions. I was with you on the track for that because there wouldn't be any need for distribution because you've locked in that already. So I thought that was a good miss on your part because I was thinking the same thing. Distributions, that's not a prepaid tuition plan. But I think what they would tell us is it's an advantage. Instead, the account owner purchases credits towards tuition at a state university. Prepaid plans may not be used to save money for other occasionals. The advantage is a guaranteed certain number of units. I don't even like the rationale here because here's the answer to the question. The advantage of the 529 prepaid plan is you have no inflation risk in the cost of that college education, and you have no investment risk.
yeah,
So
that's
if you
like
don't have any
that's
investment
where my
risk,
mind went with this
I'm with you.
question. So I was like,
I'm with you. I thought I was on the same track with you. Obtaining the best execution includes all the following factors, except.
okay, so the type, size and type is yes, the general character of the market, price and volatility. I think it's the number of market makers.
Well, the number of market makers would affect liquidity, but you're correct. It wouldn't affect the execution. So good job. Good job.
Again, I've never seen a question like
You know,
that.
these are what we've had somewhere we were kind of singing STC's praises, and now it's like any draw, right? I told you as always, I'm always wishing for anybody that I tutor for what I call the dream draw. I had
Mhm.
a guy sitting in social media the other day. He said, Dean, I got that face of death draw you're talking about, but I still took it down. I go, well, good news, and that's why we want to overlearn, right? But
Mhm.
for the most part, I think this is so far been on the broad avenues and highways of the SIE exam. A variable annuity contract holder dies during the accumulation period. Which of the following is true regarding the tax consequences? So you bought
Uh,
this mutual fund with an insurance wrapper, and now you've died.
so it's the proceeds in excess of cost are taxable as ordinary income to the beneficiary.
Man, the stuff one thing I like about you, Cindy, the stuff you are solid on, man, you are solid on. You didn't even break a sweat on that one. A broker dealer must establish information barriers between which departments?
I'm like, is it like
So
investment?
remember what this is about this is about material non-public information.
Is it research and compliance
It's not research and compliance. It's
for
investment.
institutional trading and retail?
No, 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 no. We
Right, I got
got
this
the
wrong.
market wrong. Yeah, it's investment banking and trading,
I didn't know
right?
that.
Because the traders, in this test, you got to believe in human depravity and original sin.
Hmm.
And if the traders had material non-public information, they'd use it to trade against the customers. So very much what's testable in this is every firm has to have written supervisory procedures, WSPs. And in those WSPs, they have to discuss what they're doing to protect material non-public information that bankers may have that are working on deals from other parts of the firm, primarily the trading desk, but others as well. Now, a good miss would have been here, not offered to us, is investment banking and research. All right, let's see. Let's see what it says. Information barriers. We used to call this a Chinese wall, but we stopped calling it the Chinese wall because the Chinese wall never worked. People went over it all the time. Information barriers must be maintained at firms to prevent the flow of certain information between different departments. Much of the focus, excuse me, preventing the free flow of information between investment banking and other departments. In fact, most of the communications between investment banking and other departments is made through compliance. Just for your notification, this is called taking somebody over the wall. What used to be the Chinese wall, this would be like an analyst, for example, when we bring them into the deal.
What?
Government-sponsored enterprises securities are comparable to direct government obligations, which all the following statements except.
They're not all government guaranteed or government guaranteed.
All the following are true except. You're on the right track. I just want to read it again because I think that is correct. Because Ginnie Mae is,
but
very testable are not, right? So I think that's what this is about. Government-sponsored enterprise securities are comparable to direct government obligations with regard to all the following except. I think you're correct. Is that what you want? I think it's correct.
Yeah, that's the one I want.
The grammar here, what I found challenging in this question was the grammar.
Me too.
So, and what's straightforward, and you got, Sydney, is that you should definitely know that of the government-sponsored enterprises, only Ginnie Mae.
Ginnie Mae is backed by the full faith and credit.
Others have an implied backing. Very testable. How does Ginnie Mae pay?
Monthly.
Right on, interest and principal monthly. How are Ginnie Mae's taxed?
Federal, state, and local.
Right on. That's all very testable. You nailed it. An investor purchases a 20-year 5.30 bond at par value that will yield 5.75 if called at the first call date in 5 years. The yield of maturity on the bond is?
So it's a discount bond.
Well, I'm not sure it is. It says an investor
at par. It's 5.30.
Yeah, I think they're getting there on the teeter-totter, right? Seesaw, excellent. You're going to get some yield relationship questions. So, STC is kind of being jerks here to tell you about the yield to call. That yield to call up 5 3/4 would just to cloud your mind. I call that the Jedi mind trick. And the reason you would end up getting more is because remember, they're typically, for that to be true, that means there's going to be a prepayment penalty. That in 5 years, instead of giving you par, they'd give you 101 or 102 if they called the bond from you. I just made up those numbers, but that's why. Which of the following is not true about a Fidelity bond?
I'm not gonna lie, I don't really know what a Fidelity bond is. I kind of
forgot. So Fidelity bond, Fidelity means faithful. So a Fidelity bond is a bond you purchase from an insurance company to protect the broker-dealer. Well, I shouldn't say protect the broker, protect customers of the broker-dealer from the broker-dealer and agents of the broker-dealer. I think here what I would have done is gone through process of elimination. And I don't think a Fidelity bond protects you in situation A.
I was going to say, I might go up with A, but I just didn't really remember
that. Who does that? Who does that? SIPC.
Exactly. Because I was like SIPC, and then SIPC covers, but then the FDIC covers like 250,000 or something, right?
Very, very testable. Right on. So I'm going to say this about this STC question. I'm going to say we should have been able to get this correct still, because I consider this question not to really be about a Fidelity bond, B, C, and D, but rather to be about, do you know SIPC is what is the situation in A. And then Sydney, your follow-on, very testable. You should know SIPC covers you for up to $500,000, of which no more than $250 can be cash per separate customer. Every account of the broker-dealer with different beneficial ownership. Your point, you should know FDIC is for banks, and that's $250. So excellent. A registered person has purchased 2 tickets to attend a basketball game with a client. If the tickets cost $85 each, which of the following statements is not true? Which of the following statements is not true?
So they're asking what's not correct.
That's right.
Okay.
Something here is false.
Did not attend. So I know that it's fine for the client if it goes over 100, if the client is with the,
Yeah.
uh, or the registered persons with the client. So, which is, so under FINRA rules, this is considered entertainment. I think that's accurate. If a registered person did not attend the game and gave one of the tickets, oh, it's B because that's only 85. That's underneath the 100 rule.
Excellent. 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 Right.
I
So
had to like talk myself through that one.
yeah. So purchase 2 tickets with the registered person, gave one of the tickets to the client. Yeah. So I think STC, just in general on STC questions, I don't know if Todd's going to watch this whole thing, but if you are, Todd, in general, I think STC goes a little overboard on the basketball game questions. I mean, I've got like every STC practice test has this basketball game scenario.
It's a good question.
Yeah, yeah. Which of the
That's
following
a
is
good-
true if a mutual fund investor chooses to implement a systematic withdrawal plan from the fund?
I think it's with the systematic. Um, I'm between B and C.
All payments will end at a specific date. The amount of each payment will remain the same. The withdrawals may result in reduction in capital. Okay, so you're going for B or C, which one you like best? So I said, I'd like to begin a systematic withdrawal of my mutual fund, Sydney. What happens with my payments?
I feel like the amount of each payment could remain the same, but at the same time, I feel like it's a specific date. I'm gonna go B. For some reason, I'm being gravitated towards. Okay.
Yeah, you know, we're trying to do that, but yeah, the way we test on this,
Mhm.
it's not magic like an annuity where you annuitize. At some point, you're going to run out of money. So
Okay.
you run out of money on B or you run out of money on C. The point is you're going to run out of money because you're starting to exhaust your capital. So that's why D is the better answer here, right? I say, Sydney, listen, every time you're taking money out of this mutual fund, reducing the amount that's there, right?
Mhm.
So D is the better answer. Not a bad miss. I think you're doing pretty damn good. So wouldn't worry about it. If a temporary hold has been placed on an account, it may be extended.
So I know that when a temporary hold is placed on an account, usually my mind goes to like the client being at risk of exploitation, which is usually the 15 business days.
That's right. And then this is asking about the extension.
But I think it can be extended for 10 days.
Right on.
And then again, 10 days. Yeah. 10 days. I don't know if I read again. I'm between B and D because I don't know if it's again for 30. I think it's just 10. I don't know. Maybe it's 30. Yeah. Okay. 30.
The way I think of this is it's a total of 55.
Oh, yeah. Okay.
A
Now
total of
I'm good.
55. So
So I'm like, I wasn't.
15, I go 15, 10, there's 25, there's 30. Okay, there's my 55. So I think a good memory aid device is what is a senior? What's the age of a senior?
I guess 55,
65.
65.
So 65, 55, 65, 55, 65, 55. Now remember, this is a temporary, so this isn't a power of attorney, right? Very testable. In our WSPs, our written supervisory procedures, we have to establish what we're going to do to protect seniors, right? And then most of us are going to have this thing about if you're 65 and what's this person called that we're going to contact. So we're going to very testable trusted contact person, right? We're asking our senior in mom's account, I'm her trusted contact person. So, they call me and say, hey, your mom is down here trying to wire some money to some prince. I go, really? I thought she watched enough Dr. Phil's to know that that's probably not a good idea. Thank you so much. No, I'll call mom. SEC rules regarding record retention generally require the records be kept readily accessible. So examiners love this. Sydney, I'll be back 8 o'clock tomorrow. I expect you to have this record. So that's what 24 hours means readily accessible for.
I think it's the first 3 years.
Well, the vast majority of brokerage firm records are 3, but readily accessible is 2.
Okay.
So the vast majority of brokerage firm records are 3. But this, whether it's 3, 6, or lifetime, All records should be readily accessible for 2. 6 years are items of original entry, blotters, general ledger, customer statements. The life of the firm would be spam, the owners of the firm, partners of the firm, articles of incorporation, minutes of the directors.
Meeting. Yeah.
The current yield on a municipal bond with a coupon rate is 4.5. Purchased at par and currently trading at 105.5 is. So current yield on a municipal bond with a coupon rate 4.5, currently trading at 105 is
4.26, I think.
Boo, big man. You are impressive. Are you doing that math? Are you just using your teeter? Pretty impressive.
Doing the math.
Yeah, you're beating me on the math. You're correct. I had to catch up to you. The way I always think of current yield is what it pays me by what it costs me. What it pays me is $45. What it costs me is $1,055.
The only question I've seen different, if we go back to that one, is when they ask you for the yield to maturity, because you could by doing the current yield and then knowing what kind of bond it is, premium or discount.
Yeah, excellent. You nailed every one of those. You're consistent. An investor wants immediate execution. So you're more interested in execution than you are price.
Market order.
Right on. Right on. The market order is the only order that has no contingency, no qualifier. Right? A stop order is used to stop losses, protect profits, or establish stock positions. A limit order is where you want your price or better. And a stop limit order is a contingent order. It doesn't become a live limit order until there's a trade at or through, whatever that trigger price is. Boy, it seems like they're heavy on this. A U.S. Treasury bond is selling at. We expect you to get it right every time. So far, every time you've got this, you've nailed it.
Is it B?
955. Excellent. A previously registered person was convicted of a felony 14 years ago, have served out their sentence in federal prison, is now seeking employment as a registered rep. They should be informed that
he can be hired because it's 10 years, the felony thing.
So he may be hired as a registered rep. He may be hired to provide investment advice. Which one of those do you want? We got 3. He may be hired.
I think he can be hired as a registered rep because I think after 10 years,
you get a chance to, you still have to disclose it.
Yeah.
You still have to disclose it, but it's not a reasons for statutory disqualification, Where the 3 reasons are
does that happen?
With intention. What's that? I've seen
people register as felons and then become
I've seen it once. I've seen it once where a guy, it was a white collar guy, no surprise, not a blue, he didn't like murder somebody, but he was convicted of a felony. It was past 10 years. And then, he was a government guy and he worked at the SEC and they let him back in the business, surprisingly so. And, it's unfortunate. Sometimes I read stories like that, you go, it's all about who you know. I had a person, Sydney, she was the corporate counsel of this broker dealer. And I was working with her, getting everybody at their firm registered. And she said that she didn't have to test because she got, waived out of testing. And I thought, I was just going on and on. I don't realize when it's making people uncomfortable. I said, man, I haven't heard that in years. I mean, I know it's available, but boy, I'm going on, and that's incredible. You got waived out of taking these tests. I mean, man, I'm going on and on. She goes, Dean, I was former deputy counsel at the SEC. And I go, damn, I think you should still have to go take the test, just like everybody else in the business, right? So all about who you know. When interest rates are trending upward, the economy will normally be in which phase of the business cycle? You do get economic questions on your SIE.
I'm trying to think of the cycle because I think it's peak expansion, contraction, and then trough. Is that correct?
Yeah, that is correct. So
okay, so when interest rates are trending, wouldn't that be I'm between peak or expansion.
I'm with you. That's the 50-50, right? So right now the Fed is stopped and taken strategic pause, but they were raising interest rates.
So wouldn't we go peak?
I think that's the best answer. Let's see if we get it right. No, we missed it. That was a good miss, though. Yeah, increasing is the expand, right? The economy was expanding too fast. The Fed is trying to fight inflation. They're going to raise interest rates. I think that was a good 50-50 on that one. And on economic questions, you're certainly going to get it. I wouldn't worry about this one on your exam, but I would know, Sydney, 2 calendar quarters of declining GDP can
That's
best be described as
recession.
right on. It
And
says
then
increasing interest rates increase the costs and lower employment. What they're doing, and the Fed has told you what they're doing, is they're trying to dent demand. They're trying to slow down the economy. So increasing demand for goods, there you go. As demand overtakes supply, price begins to rise. There we go, right? Inflation, too much money chasing too few goods. The rise in price is known inflation. There we go. And the Fed looks at, I like the rationale, but I don't like our answer set. But no, oh well. It wouldn't be testable that way anyways. Which of the following descriptions characterized as leveraged ETFs?
B.
Boom.
We needed that.
Yeah, well, good news. I mean, the stuff, as we said, you're selling on, you're selling on. If a broker dealer's trading desk purchases a large block of stock during the last minutes of trading, an effort to drive up the price, it is known as, or it is.
Marking the close and prohibited.
There you go. Good job. Backing away, we talked about already. A registered rep persuades a customer to purchase a security by assuring her, should it fall in value, the rep will make up the difference. This practice is known as, our practice is,
not permitted.
Yeah, whenever you get an answer set that says permitted, 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 not permitted, it's not permitted,
It's
so.
not permitted.
That's right. I mean, that's the answer. I mean, sometimes we joke the compliance department is called the sales prevention department, and they think the easiest way to stay out of trouble is not to sell anything. Which of the following statements is true if interest rates rise? So remember, the Fed controls monetary policy. That's very testable. And who's in charge of monetary policy? The money supply. And they do that through the tools of the Fed. And one of the tools of the Fed is interest rates.
So I know that with bond funds, they don't follow that inverse relationship.
Well, they actually do. That's a bad.
Oh, they do follow it. Okay.
Yeah, if you have a bond fund and interest rates are going up, the NAV is going down.
Bond, yeah. If they rise, then I guess bond and bond fund prices will fall.
Yeah, and actually the bond fund can be actually more dangerous than the individual bonds, because if you have individual bonds in your portfolio, I say, Sydney, we're just going to hold the bonds to maturity. So while you're getting your statement every quarter, as long as we hold the bonds, we haven't realized the loss. Not true in a bond fund, because if people are willy-nilly and we didn't sell the bond fund correctly as being a long-term investment, interest rates go up, the bond price goes down. Here's an interesting one. I don't think it's really an SIE question as much as it is otherwise, but from debrief that I've heard. The customer has sold a Class B share. Okay, so what we should know about that, even on the SIE, is a Class B share has a contingent deferred sales charge. And it would be for somebody who has a smaller amount to invest, but has a long-term time horizon. And I like this question. What triggered me here is this: the interest rates rise. They say the interest rates rise and the Class B share was a bond fund. And so the customer is seeing the NAV drop and they redeem. Uh-oh. They didn't hold the B share for 5 to 7 years. That's not testable, but the idea, remember, is we're going to turn your B shares and the A shares, and you didn't stay in long enough, Sydney, to turn the B share into an A share. And now you're going to get a charge, that sales charge. And at that point, that's the most expensive thing that could have been recommended. And then the idea in that question is that you didn't do the right thing in terms of making it very clear to them in the B share that it's for the long term, right? I should say, hey, well, interest rates right now, you're right, have gone up and the NAV has gone down, but now the Fed is taking strategic pause. We think that they're going to lower rates and your bond fund NAV will go back up. But hey, what do we care? The bond fund, mutual funds are for the long term. So somebody said they encountered that on their exam the other day. Which of the following events would have a positive effect on the U.S. balance of payments? So, the SIE does have economic questions more so. and they're very prejudicial. So I just again, I'm just talking out loud here. Uh, what I mean by prejudicial is they like trade surpluses. They like things that are a credit to the U.S. balance of trade.
I really like the US taxpayers paying taxes to the government. But at the same time, I think it's foreign investors selling US equities. I don't think it's the foreign thing.
Well, it's money in. So what affects the balance of trade in a favorable way is money coming into the U.S.
So is it
Well,
money, the government of China buying US
yeah,
securities?
it's money coming in.
Okay, that's what I thought. Because it was something, it was that, or it was just US, because it's not putting it in Europe.
Yeah,
And then
right now, the interest rates have been rising,
Mhm.
causing Treasury securities to be very, very attractive and competitive. And that causes the dollar to go up, get stronger, because a lot of people are buying, foreigners are buying US Treasury securities. Now, the follow-on question to that, I just told you, is that the US government of China isn't buying what they used to, but US Treasury securities are considered a safe haven. We've answered that question, but the follow-on question is when the dollar is strong, which rising interest rates will make it stronger, how does that also impact the balance of trade? And it has a negative effect on the balance of trade because now our US exporters are going to be less competitive because they're going to need more Mexican pesos or yuan or yen or whatever, and imports become more competitive, right? So
Mhm.
when a stronger dollar, that would again impact it with a trade deficit. I joke I am a problem because I like Scotch whiskey from Scotland. I like tequila from Mexico. I like cigars from Nicaragua. I am a U.S. importer. So for me, a strong dollar is wonderful. If I get more Scotch, more tequila, more cigars, right? It's not wonderful for U.S. exporters, people who are selling, their wine in China or whatever the case may be. Which of the following is the result of persistent deflation? So I think of inflation as too much money chasing too few goods. I think of deflation as too many goods and not enough money. So what is the likely result?
Would it be a decrease in the level of inflation?
Yeah, in fact, it goes completely the other way, but
Decrease in
it's a decrease in not in the interest rates, right? Because again, we want you to spend your money. So that one's a really, really tough one. But it's not the level of inflation because deflation is the opposite.
Okay, I
So
just had to think about that more
yeah,
conceptually.
yeah. I don't think you're going to see deflation on the test. You're going to see inflation, but what you will get tested on is that both are a problem. Too much money chasing too few goods is a problem.
Mhm.
Too many goods and not enough money is a problem. And so the Fed's mission is price stability, equilibrium, not too much money in the economy, not too little money in the economy, just the right amount of money in the economy, monetary policy. That's called price stability, price equilibrium. And that's what the Fed is fighting now, inflation. The second mission of the Fed is full employment. And Jerome Powell just gave his testimony to Congress. And, congressmen I thought were kind of interesting, and they're senators. There were senators. And, he said, right now, we are, focused on fighting persistent inflation. Everyone's in low rates. He says, I'm waiting for more data to come in. Right. So, we're living through an economic cycle. A registered rep is sending an email to 5 clients. So my first question to you, Sydney, is that retail communication or is that correspondence?
It's correspondence, and correspondence is subject to review. It's retail that's pre-approved, I think.
That that's right. Now, what is the definition? So you're correct, it's correspondence.
25 or less in a 30 calendar day period, and then retail is 30 or 25 or more.
Right on, right on. So based on what you just told me, B is out, right? So now which one do you want of the remaining answers? Oh,
Uh,
C is out. Now I just did process elimination, right?
yeah.
Well, by the way, I like that you knew the definition because for other test takers, Sydney knowing the definition that it's not retail gave her a 50-50, even though I knew she was going to get that right. She could have done it with process of elimination as well. Which of the following is classified as a joint account?
Would it be an account shared by two brothers?
Yeah, given that answer set, that's the only one available to us, right? You should definitely know, very, very testable. The Uniform Gift to Minors Act, Uniform Transfer to Minors Act only have one custodian and one minor per
Mhm,
account, one on one. You should definitely know that UGMAs or UPMAs are going to have the tax ID of the minor, and you
mhm.
should definitely know no margin.
No,
No margin. What type of investments have historically shown a great deal of sensitivity to regulatory risk?
is that limited partnerships?
Yeah, I'm going to say yes because they were historically known as tax shelters. I'm not sure. I kind of think, you know, um, I'll just say Todd, STC. I think I don't know how an SIE candidate would know that. I mean, maybe I'll apologize. Maybe SIE, maybe STC covers this in partnerships where they talk about tax shelters, right? So, which of the long statements is true concerning electronic communication networks?
ECNs, I think they can be used by clients that don't want to use a broker dealer because I don't think it's anonymously because anonymously is the dark pools.
Yeah, it could be either, right?
Oh, it's
Yeah,
anonymously. Okay.
yeah. So it can be a dark pool, but I like where you were on the right track. They can be used by,
So
uh,
it's designed to anonymously match buyers and sellers. Okay.
that's right. That's right. I don't like the question, so it's just that B is a better answer than D here. But if you're taking your SIE, what I would want you to know is not so much this question, is that if it's direct trading between institutions,
Hmm.
it's direct trading between institutions. C, that's known as the fourth market. The fourth market. So they'll say direct trading between institutions can best be described as, and you would say the fourth market.
Hmm.
Which of the following statements best describes an exchange traded note? This is very testable.
Um, equity traded notes or exchange traded notes, sorry. Oops, I'm thinking of equity linked notes. Exchange traded notes are instruments linked to the.
Very testable. That is very testable. That is an aim and shoot, point and click question on your SIE, on your Series 7, 65, 66. Very much a test question. What you got to be able to do is contrast an ETN with an ETF. An ETF, exchange traded fund, is
Is
not a debt instrument. What follows from that is you have default risk in an ETN.
Mhm.
When a broker dealer sells a security to a client and charges a commission on the transaction, they're acting as,
Agent.
I knew you were going to get that, ABC, agent, broker, commission. Brokers act as agents for commissions. Right? I say, Sydney, we're a broker dealer, and in some transactions, we act in our broker agency capacity. We charge you a commission.
Mhm.
In other transactions, Sydney, we act in our dealer principal capacity. We charge you a markup or markdown. We will never be a broker and a dealer in the same trade with you. It'll be a broker or a dealer. That capacity will be disclosed. Where do we disclose capacity? Where is that disclosure made? Very testable on the confirmation.
Mhm.
The confirmation, we're going to tell you what capacity. Capacity means in English, whether we act in our broker agency capacity or our dealer principal capacity. Boom. According to MSRB rules, the maximum gift that can be made to another person in relationship to municipal activities is.
I guess it's 100, but isn't there something with the
It's
voting where it's
that
250?
that's right. So
Okay.
this is MSRB G20. Who cares? The MSRB publishes rules. We deny them the enjoyment of enforcement. All they could do is publish rules. And G20, A rules are administrative rules, D's are definitional rules, G are general rules. You get two on SIE. You don't need to know them by rule number, G20 and G37. G20 is the exact same rule as FINRA's. The
Mhm.
maximum gift or gratuity an employee of one member firm can give to the employee of another member firm is $100. That's this one. G37 is the maximum campaign contribution that you can give to an elected official, Sydney, assuming you can vote for them, and you're correct, that is $250, right? So you got two numbers, you got to know 100. Now here, I think STC was kind of being nice because they didn't offer you the 250, right? Remember, they didn't offer you the 250 as a distractor. Right? A stock that typically performs in parallel to changes in the economy is referred to as
Not cyclical.
Yeah. I would know the defensive stocks. Remember, defensive stocks deliver products and services resilient to the business cycle. I'm thinking here utilities, pharmaceuticals, food. Growth stocks, remember, typically have higher PEs, little or no dividend. Value stocks typically do pay dividends, have a higher dividend payout ratio, that kind of thing. In judging the fairness of a firm's markup policy, industry rules would not consider. So remember, we have this thing called the 5% policy. It's not a rule. It's for the guidance of wise men and women. So whether it's a commission, a markup, or markdown, it applies to the secondary market, doesn't apply to the primary market. It amounts to that every firm has to have a normal pattern to their charges. And if they depart from that, they got to have a reason.
Between B and D. I think it might be D or B. Sorry.
I think it's going to actually be A because it doesn't matter whether I'm selling you a bond or a stock, the 5% policy applies. And Dean is wrong, and you are right. Man, beat the tutor. So I think that's a couple times you beat the tutor. Whether the client was retail or institutional. By the way, whenever they have to give you a half a paragraph explanation, it's a sign that perhaps among the factors are the type of security. Okay. I think the policy of markups applies to regardless of the type of security. They're saying that could be a justification. I tend to disagree with that, but oh well. Availability, we definitely agree on that. Price of the security, the amount of the money involved, disclosure, that the rationale is correct. Would not consider who it is you took advantage of, I guess is how I would rephrase that in a way that I would like it. Final arbitration awards against registered reps are reported on which of the following forms?
Is it U6 or Form BD? Because U5 is for the termination.
Right. Good job, right? I think of U4 as hello, U5 as goodbye, U6 as disciplinary actions.
Okay, that's what I thought of.
Excellent. Which of the following transactions involving a registered rep is a violation of industry rules that FINRA established regarding private securities transactions?
I think it might be C.
I think it's going to be D. And remember, very testable. It's called selling away. C is a problem.
Selling securities without the supervision or prior written consent.
Yeah, it's called selling away. I think it's going to be D.
But guaranteeing okay.
C is bad, but it's not selling away.
Okay.
Right. So C is bad, but D, I would know, by the way, that's called selling away. Sometimes on the test, they'll say an associated person of a broker dealer sells an investment without permission or notification to the employing broker dealer. This is a prohibited practice and is known as, and you got to come up with selling away. B is okay. And then A is okay. But you were right. C is bad. It's just not this. Which among statement is true regarding periodic payment of variable annuities?
The number of annuity units never changes because it's accumulation into it.
I just love the things you were solid on, man. You are solid. We just got to get you a draw where you get all your solid stuff. Right? A French company would like to have its stock trade in U.S. securities market. This is very much a test question. This would most likely be accomplished through the issuance. So what is the easiest way for this foreign company to tap U.S. Capital markets and U.S. investors? What's that?
The American Depository Receipts?
Very much a test question.
Okay.
Here, if you have foreign currency risk, you certainly do. Right? You certainly do, right?
Mm-hmm. So, okay,
It-
so a firm is
Firm is a managing underwriter of a follow-on. So we're doing a follow-on listed on New York, the aftermarket prospectus rule. So usually we would say that secondary purchasers are not entitled to a prospectus, but we don't allow underwriters to publish research on stocks. And so we're asking, is this thing apply to a follow-on of a listed New York Stock Exchange company?
there's so many rules with the prospectus. Like I know there's one for 40 days and I know there's one for 25.
That's right. B, C, and D could have been right answers to
But
different questions
different things at three.
because this is all created trading on New York. There's a lot of
But does
information
not require.
already available.
And it's a follow-on
Yeah,
offering.
that's right. Right.
Hmm.
So here, then on the bottom, they tell you why. Why? Remember, if it's a NASDAQ or New York follow-on, then the rule doesn't apply. The one that I see people get on debrief is the 90 days for what's called a blank check company or an IPO of a non-NASDAQ New York. So even if it's subject to reporting requirements, there is no aftermarket. So reporting requirements, you're current with 10Qs and 10Ks. An issuer that's listed on New York NASDAQ to file reports, if the issuer was filing an IPO and was subsequently required to deliver, there we go. So the IPO would have been 25, and then 90 days is the blank check company. During a period of stable interest rates, what type of preferred stock tends to be the most volatile? Wow, that's pretty interesting.
Stable interest rates.
Yeah, most volatile.
Is it convertible?
Yeah, I don't know, to be honest with you. I'm not sure what they're getting at in this question.
Because if
Uh,
interest rates are high, like the convertible would be like beneficial.
yeah, because you could do that. Yeah. I'm thinking it's A or B just because they're opposites, but let's see.
Or it could be cumulative.
Oh, excellent, excellent. So again, you weren't struggling as much as I was trying to figure out what the heck they're asking us.
I was kind
I
of
like I like that what you went to is you turned the question into an answer you did know. And Dean was still, freaked out about what they're trying to ask, and you were immediately said, "Well, okay, if interest rates aren't stable," and you did it kind of from the reversed order. I like it. Good job, excellent. I'm not sure. I wanted to read the rationale because I'm not quite sure what they're trying to get at. Convertible preferred stock may be converted. I get that. For that reason, the common stock into which the preferred stock may be converted has appreciated period. Okay, cool. I'm not quite sure how we're supposed to get that. Maybe we should have got that with the Sesame Street trick. One of these things is not like the other. All the following persons are permitted to be named as a trusted contact person for a senior investor, except.
So it could be a friend, it could be a family member. I don't think it could be a law firm.
I'm with you. I don't know that either, but I would take that as my answer either because it's a person, not a law firm.
Mhm.
Who knows if you call a law firm out how long it takes them to get back to you? A customer exceeds SIPC limit, so you're over 500,000. Oh, damn, Sydney.
I think it might be that he doesn't have a claim to the excess amount.
Well,
Or
you become a general creditor.
you become a general creditor.
I'm gonna mark you wrong just because
Mark me wrong because I deserve it. I don't know why I was thinking that.
who keeps track of the shareholders of a mutual fund?
Um, is it the underwriter, the investment is it C or D?
And it's neither.
It's the transfer agent.
Yeah, the transfer agent, which is the shareholder services, right? The custodial bank handles the monies and securities or holds the monies and securities. A. If I say who holds the monies and securities of a mutual fund, it's A. If I say who manages the portfolio of a mutual fund, the answer is C.
Yeah,
If I
I think
say
it's
who's
rather
responsible for the distribution of a mutual fund, or who is the sponsor of a mutual fund, that would be D, the underwriter. A registered representative previously operated a sole proprietorship and requested protection from bankruptcy. The rep representative did not disclose her affiliation with the proprietorship when she filed Form U4. Which of the following statements regarding the application is true?
She filed a statement with false or misleading statements. Hold on. Yeah, okay, yeah.
Remember, I'm being aggressive hitting buttons when you pick your answer. Remember, your flash response is usually your correct response, right? And yeah, this is a problem. Equity inverse exchange traded fund is most similar to. I kind of like this one. That's kind of fun.
Selling stock short.
Yeah, I like that one. That's kind of a clever way to ask that question. Yeah. Good job, STC, Todd. Man, that's a good one. Who is responsible for creating an official statement for a muni bond offering? By the way, what that means is they're both bearish. I would probably follow up if I was STC with another question saying, well, why would you do the ETF versus selling short? It would be the risk. Selling short is unlimited. The inverse ETF, it's not. Statement, the official statement. So the official statement is the prospectus-like document for selling a muni bond.
Isn't that the bond counsel?
Well, the bond counsel is going to give
bond counsel does the trust indenture.
Yeah, well, no, slow down. You're starting to get a little quick here. The issuer does the official statement. That's the prospectus. The bond counsel, very testable, does the legal opinion. And the legal opinion will either be qualified or unqualified, with reservation, without reservation. I think that's more likely going to be a 7 question than an SIE question.
Oh, well.
But remember, we don't use prospectuses because muni bonds are exempt from registration requirements of 33. A company wants to buy back some of its shares from existing shareholders who attend her. Oh, man, they got us last time, Sydney. Let's make sure they don't get us this time. Right? The company offers to buy up to 5 million shares at 15. No minimum number. That's where they got us last time.
It sets no minimum number.
Yeah, there we go. So, a shareholder wants to sell 3,000 shares. If 4.9 has been tendered, where the tender offer is going to be open for 20 days, the stock the company buys is treasury stock, has no voting, pays no dividends. The company, how many shares will the company buy? Okay, so now we got to be careful what we're being asked. Last time they asked us about the shareholder and there was a minimum and we missed it. This time they're asking us about the company. And I think, how many of the investors' shares will the company buy? Okay, so now we're asking about, the company. A shareholder wants to sell. I think she's going to sell at 3,000. What do you think?
Yeah, I think it's 3,000 because the 2,940 doesn't make sense to me. If that's the answer, then
I was just gun shy because they got us last time. So that happens, right? You go, ooh, bastards.
yeah.
Which of the following persons can a registered rep either make a loan to or borrow money from without providing notification? I like this one.
Is it a personal relationship? Oh, wait, hold on. An institution that's in the business of borrowing or lending funds, another employee, a company with an RR. I feel like anything, but like I think between A and D, like you'd have to
It's a bank, right? You're going through the normal process. The way we say this is bona fide. That's Latin for good faith. And so, you're B of A, Wells Fargo, JP Morgan, you're, Citibank, you're going through, that's a bank that's in the business of borrowing and lending or lending funds. By the way, broker dealers, remember, they do that too through margin accounts. So you can't borrow from another employee of the firm without notification. Personal relationship, you need notification. So it's B. A corporation will be paying a cash dividend to shareholders. We would expect on what date? Oh, I like this one. On what date would you expect the stock to go down?
The X date.
Yeah, right on. I like that answer set. By the way, if you said C, you should flunk the entire test immediately.
Yeah, I don't know what the meeting.
Remember, there's no such thing as a meeting date, so don't be taking answers on stuff that isn't there. A full service broker is required to conduct an anti-money laundering test at least.
I think it's either annually or quarterly. I think it's annually. Yeah.
Yeah, I miss it used to be buying annually. This is embarrassing. And Fenway was doing their inspection of my branch, and I had my report there. They asked for it, and I showed it to them. They said, "Well, Dean, this is over a year old." And I said, "Well, that's fine. I mean, I only have to do it once every 2 years." And then they said, "Dean, you didn't get the bulletin." I said, "Yeah, because you're supposed to read the bulletins from FINRA, but you
Mm.
kind of get lazy and they pile up, and it's like, is this really something I need to look at?" And bad form. Oh, my bad. So it's annually.
All right.
What the following choices would not be subject to the holding period restriction under 144? So if
Oh,
you have unregistered stock, you got stock directly from the issuer, then you're going to have a 6-month hold. So they're asking which of these situations do you are not getting stock directly from the issuer, you're getting stock that has already been registered in some way.
so I know that control stock doesn't have a holding period, but they have volume limitations.
Well,
And
controlled
if
stock,
you
if they, well, hold on,
market,
slow down a little bit. So I like what you said, except control stock bought in the open market will not have a holding period on it, right?
right.
So example I always use is Larry Ellison took a board seat at Tesla.
Mhm.
Tesla gave him 1 million shares unregistered directly from the issuer to serve on the board. And to show his, that he was, involved, he bought 5 million shares in the open market. Now, I think, Sydney, where you were heading is correct to tell me that the holding period does not apply to the 5 million shares that Larry bought in the open market, but the volume limitations always apply. And
Yeah.
this isn't about the
Control.
volume limitations. This is just about the 6-month hold.
But
Now,
under
in
a
my,
private placement, doesn't control stock not have the 6-month holding period?
if you got it through a Reg D private placement, it's control stock, right? So let's say that Tesla is doing a private placement. They're doing a PIPE. They're going to be selling unregistered stock in Tesla to institutional investors.
Mhm.
And, T. Rowe Price, Fidelity, BlackRock, the usual suspects. And Larry Ellison says, I would like to participate. So he wants to participate in the PIPE. He's making a private investment in a public equity that is unregistered stock that has a 6-month hold. Right? So it's like learning a foreign language. Now I'm going to ask you, what are the volume limitations under 144?
So for restricted stock, it's a 6-month holding period. Um, and then
And then
I'm
they
trying,
can sell up to, I think a good way to remember it is 144.
oh
They can
yeah,
sell up to
greater
1%
than
of the
up to
outstanding
1%
stock
or
or the average
4%.
of the last 4 weeks trading volume
Yeah.
up to 4 times a year, every 90 days. They're going to have form 144.
Yep.
Okay, boom. Not bad, not bad. I just wanted to thank both Sydney and STC for allowing you who may be viewing this to take a free ride. I'm going to stop the share because Sydney and I are backstage going to talk about her and her test date and whether I think she should go test. And the answer I'm going to tell her, don't tell anybody, it's a secret. I'm going to tell her to go test. All right, for those of you looking for additional things, just check out the channel. We always got new stuff coming. And let me end this thing. How do I end the recording? There we go. Boom.
All
Are
right.
you sure you want to stop recording to the cloud? The answer is